Back to Goofy Investing, a channel where we talk about investing into the stock market. This video is going to be about ADMA Biologics. They recently had quarterly earnings reported, and we're going to go over those earnings. I'm going to do some analysis, and overall, I'll tell you what I think about it all. All right. So, without further ado, let's look at some stock price action. Year to date, we're up 307.08%. On the 1 year, the stock's up 360%. The 5 year is 355%. Max since IPO is 114.07%. So, not too bad. Okay, not too bad. All right, impressive stock price performance. I'm sure a lot of shareholders are happy about that. Let's go to earnings. Their last quarter that they announced on the 8th of August, they beat by 5 cents per share on their EPS, and they beat on revenue by 20.78 million. That's logging revenue growth of 78.29%. And this actual EPS beat is staggering. Probably, I want to say about 40% increase or what have you based off consensus estimates. All right, so I've listened to the conference call. I've dissected some things. I've looked into different things. Overall, I'm very impressed with this company. Everything seems like it's going to plan. Looks like the CEO came through and outperformed. He seemed pretty confident. And throughout this earnings call, I got pretty much a snapshot story of what's going on with this company and their actual revenue trajectories, total addressable markets, different products, strategy, what they're doing with the financials. I think that this is a great company. All right. If you've been watching if you've been following along on my channel, for me to say a company is a great company is pretty tough. Okay, I got a lot of standards that are the bar is. We'll pretty much say the bar is raised up there. A company has to really impress me to have me convinced that they're a great company. All right. What are a couple things that I've noticed, all right, throughout the earnings call of the different angles that a lot of investors don't look at, quite frankly, and they just look at the quant and the numbers and so forth. One, the leadership. Okay, they're shareholder centric. All right, they care about the shareholders, their mission, their team that they have. Very efficient team. They're always running the operations lean. They're coming through with hit times, and they deliver on results and execution. All right, and that's what you need with these small caps. All right, it's a lot of it is execution dependent. All right, and less macro driven. Some of these business models have more heavy macro conditioning in their actual business model, but when it comes to health, I think that's probably not really. The macro doesn't have too much to do with health problems. If someone's sick, they're going to pay for medical. Okay, it is just what it is. All right. Could there be some political disruptions in health insurance policies that affect maybe revenues in this sector's market? Sure. Are we in a political season? Yes. Are these changes going to probably happen this year, coming along with the elections and so forth? No. Okay, so policies have a lag of a year, pretty much a year or two after the next president comes into play and comes into office. All right, so there's that to consider. All right, so let's talk about this revenue beat. 20.78 million. This is the first time in the company's history where they reported revenues over 100 million in a quarter. So pretty impressive stuff. We'll go to their income statement. As you can see, their quarterly revenue growths are very, very impressive. Okay, I don't see any quarters where through the eye can see that we've seen revenue decline. All right. A lot of the times with these pharmaceutical companies, when their patents run out, their revenues start bleeding out because different generic drug manufacturers start kicking in and eating the TAM away. All right. Um, let's talk about the main product and where this new revenue came from. All right. We'll go back to their presentation. Um, here it is. Here it is. So this product, Asceniv, I probably pronounced that wrong, but this is the new rollout of their new drug, which they have deployed into the market and is being received very well. Apparently, a lot of patients are reporting that this drug actually works, and these are for immunocompromised individuals, hepatitis B, hepatitis A, whatever. Okay. And these individuals have gone through the initial stages of treatment, but have not been getting better because the drugs or treatment that they've been receiving has not been working. So this is more of like a third, fourth line, fifth line treatment um, resolution given by the doctors when they're seeing no improvement. All right. Kind of like not really the last line of defense, but if all else is worse for the patient, nothing's working, or a lot of things aren't working, this is the drug that the doctors allude to kind of like last hoorah it, and typically it works apparently. All right. So this actual drug encompasses, I want to say, about 70% of this company's revenue, revenue distribution or revenue share on the chart. So that's good in early stages with these small cap companies. You heard me say it, get it how you can. All right. But later on, if I'm a long-term investor, I'm going to be looking at product diversification and revenue. And this is, of course, not an immediate, I want to see this in 2 years. I want to see more product introduction and diversified revenues. More so, like if I'm holding this for a decade, I want to see more product diversification in the portfolio because these drugs do have patent expirations. According to the earnings call, I pretty much learned that mid 2030s, the patent for this drug expires. So um, a good decade, a little over a decade of patent protection by law. A lot of companies, a lot of pharmaceutical companies, they just don't even mess with trying to infringe on different patents because I mean, it's a highly regulated space. So if this company sues the other company for patent infringement on the actual medication, um, that other company is pretty much done for. I mean, the United States is pretty ruthless in the court systems when it comes to this. When it comes to patents and patent protections for healthcare, because they're trying to encourage more investor dollars in innovation and research into the medical space. Okay. All right. So there's that to consider. In their actual earnings presentation, they talk about the formulas of the actual therapies into the drugs. Um, I'll be transparent. I have an MBA in finance. I'm not a scientist, so I don't understand a lot of what this is. But the general scheme of it is they're trying to explain how it all works. And I mean, you might as well be speaking another language to me when it comes to that. But, that's why we have specialized personnel in certain sectors to handle that stuff. As an investor, you're not going to know everything. The more you know, the more of kind of an investment edge you might have. But in general, judgment based as an investor should be looking at results from the management. Okay. Share size. All right. Market share size. All right. according to this, some competitors and market share, and reviewing their earnings call, it looks like they only have tapped 3% of the total addressable market against competitors in this. The supply demand is lopsided. There's more demand than supply, and their supply is capped based on plasma donors in correspondence with their plasma donor centers. And even a portion of those plasma donors, only a certain amount have a specific genetic plasma that they need for this medication. Okay. As you can see here, I'll highlight it here. Their penetration is less than 3% of the addressable total addressable market. Okay. Um, Breakthroughs, technological breakthroughs. Let's talk about it. Another part of the story, which is a story that's forming with this company, is they're guiding late 2025, early 2026. Room temp patent regulatory approval. Okay, is that's what they're trying to charge for, and that's what they're trying to get approval for from the FDA. If they get approval for this new patent type to have extended storage at room temp for the medication, this will dramatically increase margin, lower logistical problems, fix logistical issues and constraints, and see an increase in speed and logistics and storage and so forth. All right. So that is something to look forward to as a tailwind of the company. Let's talk about a headwind that I see according to the earnings call that might blindside some investors. All right. So a portion of this revenue was realized based off a one-time occurrence of some rebates through some insurance, some Medicaid. Let me see. There it is. So they saw a favorable impact. A portion of that jolt in revenue growth was one time and not reoccurring due to some US Medicaid rebates for these products. Okay. Maybe there was some sort of backlog that realized that, and there was credits that were given to the company. So that dramatically boosted it up. All right. Boosted their actual profit and revenue and so forth. All right. So that's going to be a harder comp to comp against. Um, Revenue growth cures a lot of problems for companies and investors. If they're growing radically, um, to me, I'm willing to overlook some shortcomings in other departments, because if they grow, there's more that from the top line that will just naturally fall to the bottom line, and there's more levers that they can pull. There's more accretive levers that they can pull from their actual profit margins. Okay. So analysts were trying to let's talk about analysts, management and analyst correspondence, and the discussions they had. Um, my my perception of the earnings call is analysts were trying to get management to guide further out for the remainder of the decade up to 2030. The CEO pretty much said no. I'm optimistic, but I'm not going to. I'm not going to project out that far. I don't have a crystal ball, and that's not appropriate. But there that is. But I'm optimistic. Um, so analysts are thinking more. There's some potential yield enhancement of 20% of the bulk drug, um, that may be promising, along with this agreement for room temp storage. Analysts were trying to get out, hey, is there more room in the margin um, to be more than 20%? And this is probably based on consensus estimates and results based on the past of the CEO kind of lowballing a little bit. And the CEO has been pretty much historically had a reputation of, how do you say, being conservative with his projections. So you can see kind of that tug of war with the analysts trying to get more information to put out the projections for future revenue growths and profits and so forth. But the CEO pretty much remained conservative and said, this is it. I'm guiding 20%. And going back to it, let's go back to earnings. According to management, they're guiding revenue growth into 2025 of 30 to 35% revenue growth. In fact, all the way to 2026, as I recall. So these numbers by analysts are lower than expected. Management is guiding consecutive 30 up plus 30% revenue growth according to the earnings call, from what I've gathered. Okay. So these actual projected models place, if they execute from a forward PE basis on the peg, that would place them on a forward PE for the next few years of under 1 if the management comes through. And that will probably explode more EPS growth as well. Let's go on to manage balance sheet management to see what they're doing with the balance sheet, because this video is running long. We had a lot to cover. Increase in cash. If you've looked at my past video on ADMA for original analysis, I told you that I looked at after the 10K analysis and the terms of their debt agreement. I didn't like the terms of the debt agreement because basically they're penalized on paying off debt, and it's pretty much formatted to where they're going to get the maximum interest. Now, this is a stock equity in a growing company. So when you have these kind of variable range debts, corporate credit card type of ideas, they can only grow so much based off debt on the debt market, if you will. A company can outgrow the debt. All right, and based on the management, and that's something I've been looking closely for at the beginning of the conference call, going through it. The management has addressed an actual debt reduction plan. Okay, and they haven't called it a debt reduction plan, but they pretty much just said this is what we're going to do. Basically, they're going to start stacking cash. Okay, if we go to their cash flows are starting to explode. Let's go quarterly. All right, so I mean, these are record cash flows. The cash flows are going to they're starting to pour in already, and multiple expansion of cash flows. Levered and unlevered free cash flow, there's not too much of a big gap. So debt services are not too bad. Net income is exploding. Once again, our revenue growth is exploding. Everything's going good for this company. The stars are aligning. They got great management. Now it's just going to be based on the market to award a multiple, and based on momentum and analysts, upgrades, and so forth. So back to the balance sheet. They're going to start stacking cash. All right. Last quarter they had, the quarter before the one they just reported, they had 45.3 million in cash and cash equivalents. Now they have 88.2. So they've nearly almost doubled their cash. Okay. So that is something I like to see. And they did it in one quarter, which is pretty crazy. All right. So the debt to cash ratio is starting to close up. They've said that they want to get to zero net debt. Right, they want to break even on their cash balance and their debt. Okay, if they, as an investor, I kind of wanted to hear them say our intent is to go into a net cash position. That probably would have made me even more bullish. Okay. My assessment of this company is the growth is getting priced in, deservingly though. Okay, the management is performing, so stock should go up. Now, as the valuation starts increasing with higher forward PE multiples, the risk to the expectations become more and more perfect, to where the company has to outperform, and the more tiny little mistakes they make, there's more of a risk for the stock to actually take a hit. Okay, So that's something to consider. I have not done I have not done actual quantitative analysis or as far as the numbers and future profit projections. Based on my interest into this company, I will do the projections. So you're going to have to stay tuned for the next video. Okay. If you found value in this video, consider subscribing. Hit that like button so I can get a little more exposure on YouTube. I don't get too much views, but hey, we're at the grassroots underground phase. um, if you want to join a community of like-minded investors in that grassroots type of aura feel, then consider joining my Patreon, the Looney Syndicate, for $5 a month. You get buy and sell alerts, access to exclusive content. I have different products included into the actual Patreon price, different spreadsheets, instructionals. All right, you get access to the hidden gem collection. You get more exclusive, closer access with me on a daily basis. All right, so check that out. Something to consider, and we look forward to seeing you there. Once again, thank you all for your support. Comment down below. All right, comment down below on maybe what you think of ADMA's future, and so forth as an investment. But with that being said, enjoy the rest of your weekend.